For now, well, the market is 12 points away at the Nifty level from an all-time high. I mean, it's already done that in the past, but new all-time high is always something that we celebrate. S. Krishna Kumar, CIO of Equity at Sundaram Mutual Fund, is with us now. Krishna, good morning. Thanks a lot for joining us. The market's at new all-time high, but the broader market's still some distance away, even though it's started to participate of late. Your thoughts on whether it's a matter of time before the broader market also catches up, or is this going to be essentially a large cap driven market?
Yeah, I think when you have this kind of correction and you come off it, the large caps attract the initial flows, particularly the passive flows, and then the the flows get more choosy and selective in terms of identifying better stocks for alpha. So as the risk appetite gets better and better, the broader markets tend to participate and tend to move ahead in terms of return generation. So into this calendar year, we will see that as you get better data coming through over the next 6 months, the rally would get more broad-based. Also, the election that is probably happening at this point in time will keep investors a little bit more cautious. And however, I think we are seeing that the earnings visibility, which was lacking earlier, is much more stronger at this point in time. With the financial space getting a lot better, and clearly that's kind of driving earnings across on a broader market and also on a large cap index basis. So I think we will see the breadth of the market incrementally getting better and better as we have seen over the last 2 months.
Well, today is not that day, at least, Krishna. Today we are seeing the mid cap index up just barely 0.2%. But the Sensex and the Nifty are up 0.5%, and we probably could be celebrating fresh all-time highs with you in the next 10 minutes, the way in which the Nifty is charging, 11,747, so just about 14 points away from staging a new high or achieving a new high. But to be fair, the breadth of the market is good. Even if the mid-cap index is only up 0.1%, the number of stocks that are in the green are fairly substantial, so it's about 2.5 stocks in the green for 1 in the red. So market in a fine spot, you will have to say. Krishna, you alluded to earnings growth, but then you stopped with financials. Are you seeing it, or will you see it in other stocks, especially this quarter, and that is Q4 and Q1?
Yeah. So I think the slowdown that we saw in the last quarter and more, given the credit tightness in the economy, has impacted the consumer discretionary space broadly, be it the automobile, auto components, or be it the the other durable goods, etc., which also in turn has some impact in terms of the suppliers to these industries. So there has been a manufacturing weakness that you have seen in the fourth quarter as the companies readjust their stock levels, etc. That's also reflected clearly in the IAP numbers. So the earnings recovery in the fourth quarter is not going to be broad-based, essentially driven more by the financials. So ex of financials, you would see Nifty still reporting a 12 to 15% growth, but including financials, the number could be upwards of 25% in the fourth quarter. So it's definitely financial heavy in terms of quarterly numbers, and also into the next quarter too. However, I think we should look forward. Look at the PMI data that's coming through. PMI is clearly over 53, and that's how probably you will have to look forward in terms of how the ordering is happening, how the purchasing managers are behaving. And there, when you speak to companies, there is all-round optimism that come June, July, things will be a lot better on the ground, and also the efforts of the government and the RBI overall to improve the situation on liquidity, and also the foreign flows that are coming in quite thick are definitely going to have an impact on the liquidity and enable transmission of rates and better earnings trajectory across the industries.
Okay, I think your positive sentiment is rubbing off on the markets because it is the high point of trade right now. And the star of the show today is ICICI Bank, at least so far. It's the top Nifty gainer, and it's contributing about 18 points to the 55-point Nifty rise right now. The other big contributor is Reliance Industries. So just pull up that stock. Ahead of the numbers on Thursday, Reliance is contributing about 5 odd points or so. Krishna, hi, good morning. You know, in your funds, you have a large presence in the cement space, whether it's Heidelberg Cement, JK Cement in your Sundaram Smile Fund, or Ramco Cements in your Sundaram Select Mid Cap Fund. We've seen a lot of the cost pressures ease in the cement sector. I mean, petcoke prices, for example, have fallen 20% from the peak that we saw in August. How much of this is already factored into the prices of these stocks, or do you see, you know, more upsides both in earnings as well as in prices?
Yeah, I think the analysts have been quite to speed on estimating the cost benefits, basically, some of which flow through into the third quarter and some happening in Q4 and now into Q1. While those are factored into, what could be the surprise for markets is the strength in prices that are visible across the country. Even though that could be, you know, the election time, I think prices are up quite sharply over the last few months and are sticky also. The second thing that's also happening is cement demand in the quarter 4 has been very, very good. Speaking to various companies, one does understand that there is hardly any clinker available in the market at this point in time, which gives you an idea of the tightness in terms of the market here. So we do see that we could be in for a year or two of strong demand-supply mismatch regionally, and that could have a telling effect in terms of prices. And this could be the upside that the analyst street is missing at this point in time. So we remain quite optimistic on the cement space, given the various capacity constraints that are there in different parts of India, and also the price discipline that the manufacturers have been able to maintain in certain parts where utilization levels are lower.
Okay. Krishna, your thoughts on autos? That's clearly one space which is showing signs that it's bottomed out. Now, may not be backed by numbers yet in terms of sales numbers, but stock prices are moving up. Your thoughts on what is the market building in right now?
Yeah, I think so. The last 6 months, you have only heard all the bad news from August. So that's had a fairly sharp impact from a price perspective, be it the auto OEMs or the good suppliers to the auto industry, the auto component companies. They have all been big drags on several investors' portfolio. The OEMs have been smart enough and resorted to, the inventory management in the fourth quarter. Right now, as we speak, the inventory levels are far better and near normal in the channels. So we see that going forward, the primary sales will also pick up pace, and our interactions with several automotive companies do indicate that the worst is definitely behind them. The production schedules which are being cut in March and now are seeing normalization at this point in time. Of course, there are some clouds over the horizon in terms of, the BS6 transition at the end of this year, probably from December, and also the cost pressures therein. Also, the other on two-wheelers, you have the braking system changes, which are also pushing up prices. So these things are basically getting absorbed into the market at this point in time. We see again that overall, with better liquidity and lowering of rates, the credit push that's being given at the NBFC level, we see the automotive guys seeing better times ahead. Typically, if you are to build your portfolios around these stocks, it would be a good time when there is a lot of doubts about the demand recovery, etc. I think so. It's a good time to add to stocks in the portfolio wherever you think there are good opportunities.
Okay. Well, even as you speak, we are just about 5 points away from setting a fresh all-time high on the Nifty, 11,755, Krishna, and the Sensex up 230. So that's heading to almost 39,200, 39,150 actually at this juncture. But the big performer is the Nifty Bank, which is up 0.7. and largely supported by ICICI Bank at 2.7. Very quickly, a last question, Krishna. You will continue to buy even at all-time highs?
Yeah, I think, let's not just look at the indices alone. I think if you look at how the overall profits of companies have moved over the last 2 years since we touched the last high, and also if you look at the market cap to GDP, etc., you would still broadly we are still left, and also from a growth perspective, you are really a good 20% kind of CAGR, and if you look at even a lot of the mid-full also, they have been reflecting. So I think investors should continue to allocate benefit from the long-term growth in the economy at this point in time, rather than just looking at fresh highs in the market. I think we also we also hitting fresh GDP highs, right? So.
Okay.
So
I don't know. Actually, it's getting
given the current.
That's getting revised lower, isn't it? But anyway, it doesn't matter. It is still 7% or 7.1%. So to that extent, you're right. Thank you very much, Krishna, for joining us.